Okay, so guys, this is the first video of the 5 parts video series. So the first part there was the introductory one. So it was where to tell us about the market structure itself. How is the structure of the market is formed. So today on this video, what we're going to try to talk about is in fact the market structure. So you're going to talk about the first thing that forms the market structure itself. So our first topic is going to be the institutional order flow. So we're going to be talking about institutional order flow. Some say institutional order block. Some say institutional order flow. So it's almost one in the same thing. So it's either you call it an order block or an order flow. It's almost one in the same thing. So by definition, in my own understanding, when it comes to this topic, what is institutional order flow or order block by definition? So the institutional order block, it is the last bullish or bearish candle on a support or resistance level. It is the last bullish or bearish candlestick on the support or a resistance level. Right. So a bullish order block creates a bearish signal. A bearish order block creates a bullish signal. So these 2 points are very important. So firstly, you should know what is the definition of the order block or an order flow, and you have to know these 2 points, what they actually mean. So we're going to go through them over drawings, and then we're going to look at actual examples on the charts, actual scenarios on a live chart per se. So let us assume that we want to look at we want to look at a bullish order block that creates a bearish signal. So let us assume that the market is in an uptrend. The market is in an uptrend. There is your first candlestick. So there is your candle there. So let us change it. Let us change the color to be green. So bullish candlesticks. So the market is going in an uptrend. Those are 2 bullish candles. And then there's a third bullish candle. And then there is a 4th bullish candle right there. Okay. And then on the 4th bullish candle, let us assume that this happens. This happens. A bearish candlestick comes like this. A bearish candlestick like this. So you see that there's 4 bullish candles, 1 2 3 4 that are forming an uptrend, right? So this is our last bullish candle. So this bullish candle here, this is the one which is an order block. Why? because it is the last bullish candle there on the what, on the uptrend. So the minute we see this bullish candle and then a huge red candle comes then after it, what do? We pause this candle. We create a zone on this. You create a zone on the high and low of both of the bullish candle. You create a zone there on the high and the low of the bullish candle. Let us make this thing to be pale blue, a little pale like this. Yes, so you see now we've created a zone there. We've created a zone there on this bullish candle there. So this bullish candle right here, this is now in institutional order block there. Why? Because whenever the market comes back to this level, so since this large bullish candle, this large bearish candle has occurred, the market will start trading lower, right? But whenever it comes back to this level, if ever the market comes back to this level, it will get rejected and then it will start trading lower. So it will get rejected and then it will start trading lower again. Why? Because now there is some huge sell orders that came here with this large bearish candlestick. So this concept, guys, is as simple as straightforward like this. So as long as this candlestick, this large red candlestick is still here and there is no new candle that has came and maybe closed outside this whole zone right here, this zone is still effective. So it's 1, 2, 3, 4, the last bullish candle. This is the last bullish candle. Then a red bearish candle comes. The minute a red bearish candle comes, we pause this zone. Pause this zone. We pause it. Let's call it this zone a pause zone. POZ. Let's give it a name. We pause this zone. So this zone is a pause zone. POZ. A pause zone. So the minute the market comes back on the pause zone, it will get rejected and goes back down, because now this level has now became a significant level of a bearish signals. Remember that we said a bullish order block, which is this one, creates a bearish signal. So this zone, all of this zone is an order block now, which one, whenever the market comes back to this level, the market will get rejected and then it will start moving lower. So I guess this is just a simple, straightforward definition of a bullish order block that creates a bearish signal. So let us make an example of a bearish order block. So let us remove everything that is here now. Remove. So let us remove everything that is here. Okay, sometimes guys, TradingView does this thing. It just becomes slow for no reason. So it's better to just wait on it. Okay, this is getting okay, right. Let us wait for the chat to come back, guys, because I cannot cancel this thing now since it's already recording. Okay, let's take the pause to the side because we will use it again. Okay, so now let us try to create a bearish order block that will give us a bullish signal. Ne? So let us assume that the market is going down. Ne? So when the market is going down, they should be bearish candlesticks. Ne? They should be red candlesticks which are bearish. They should be bearish in nature. So red means danger, so it means the market is actually going down. Okay, that's our first bearish candle there. Bearish candle number 2. Bearish candle number 3. So we're assuming that the market is in the downtrend, right? And then bearish candle number 4. So you remember what we said. A bearish, sorry, the last bearish candle will create what will create the order block. So, and then this happens. This happens. A large bullish candle happens here. A large green candle happens here. The minute this large green happens here, what do the rules say? It says we pause this whole zone. We pause that whole zone. So let us create our pause zone. So the pause zone should be on the high and the low of the bearish candle. So it should be on the high and the low of the bearish candle because we are creating a zone on that whole candle there. Even the wick and even the wick, the highest point the market went, we create that pause zone. So our pause zone, we said it's blue, and then we make it lighter. Yes, there is our pause zone. And then let's put this pause back here. So this is our pause zone. So it's 4 large bearish candlesticks, and then the last bearish candlestick is it forms the bullish order block. So we pause that whole zone that has this candlestick in the opposite direction of those one. We pause that zone. So whenever the market now comes back to this zone, because the minute a bullish candlestick happens, we assume that the market will go in this direction, right? Will go higher. The market will go higher, right? And whenever it happens that the market comes back to this level, price will get rejected on this level, and when price gets rejected on this level, price will actually do what? Go higher again. So this whole zone, it is what? An order block, guys. So this concept, it's simple, but a really powerful concept, so let us check an example here on this chart here, GBP USD 30-minute chart. Let us check an actual example here on this chart. So that was just an illustration there. So here is our zone right here. The market is moving higher. The market is moving higher. So this candlestick right here, that is right here. Let me just try to draw this thing. Where is my drawing tool here? I've never actually used the drawing tool on TradingView, but we're gonna try today. Yeah, I know it doesn't allow me to draw. Okay, but this is our last bullish candle. This one right here, this one that I'm highlighting there. That is our last bullish candle, right? This one right here. This one right here, guys. This one right here. That is our last bullish candle. What do the rules say? We pause that whole zone. That's the bullish candle, and then that is the bear candle on the opposite direction. That is the bearish candle. We said we do what? We pause that whole zone. We create a pause on this whole zone. Look at what the market did when it went back to this zone. So the high and low of this candle, we paused it. This is our POZ zone. POZ, as we said before. When the market came back to the zone, it got rejected, and then it traded again back into this zone. It got rejected significantly. So there was an order block. So an order block forms, we said it forms in a support and a resistance level, right? So this is a resistance level. So this was support previously. It broke, and then it broke higher again, and then it broke below, and then it was a resistance level. So which one was the previous bullish candle? In this case, it was this here, this one here, and this was the previous bullish candle. In this case, what do? We also paused this level here. We paused it. Okay, let me put the blue color so it can be much more effective, like the one at the top. So we created a pause on this zone right here. Look at what happened when price got on this zone. This zone now is like a support zone. It's like a resistance zone. Sorry, its price is being resisted from going higher. Got rejected, then got rejected. Price started to move lower, and you see this thing keeps on going on and going on and going on and going on. Here again, this was the previous zone, the previous bullish candle. This one right here. What do we do on the previous bullish candle? We pause the zone. We put a pause on the zone, POZ. We create this zone, POZ. And then what does the market do when it touches this zone? It gets rejected, and then it keeps on falling. And then again, the last bullish candle, this was it. And then what did we do? We pause again this zone, and then the market starts falling again. So these zones, guys, they occur in in support and resistance levels. these zones they occur in support and resistance levels. So if you have already drawn your supports and resistance level, if you do not know how to draw your supports and resistance level, there is a video there on our YouTube channel that we did about 2 years ago, which shows you how to plot supports and resistance levels. And then after that video, you watch that one first and then come back to watch this one. So let us make an example on a bearish order block that creates a bullish signal. So on our example, it's on the NES 100. So this one we're looking at GBP USD. Now we are going to look at in NES 100 for a bullish signal onwards on a bearish order block. So I already put these levels there on the chart because I also use these things myself, so I cannot talk about things that I do not use myself. Okay, so the story starts here. This was the previous bearish candle right here, and then what we did, we created this pulse level. Let me remove this. We created this pulse level on this bearish candle. We paused this level. Look at what the market did when it came back to the pulse level. The market got rejected and then it started to move higher again. And then the previous, you always have to look left, guys. Always look left. You see, in South Africa, when you are driving a car, they say keep left, and they say the same thing applies here on this I cannot say that it's a strategy, but it forms part of a strategy. But on this statement about market structure, you always have to look left. Why? Because price action, most of the time it repeats what happened previously. So we are predicting that what might happen in the future with price data that happened previously. So this was the recent order block, or someone else might say this one here was the recent order block. This one right here as well is still, you are still correct, and then you created a pause on this zone, and the market, when it came back to this level, it started to move up. Bear in mind, this is a 30-minute chart, so price takes a bit longer to play out on 30 minutes charts. Do not try to apply these things on smaller time frames, because they can work but not as effective as on higher time frames like the 30 minutes, 1 hour, H4, daily, weekly, and even a monthly chart. The bigger time frames tell us the bigger picture, but the smaller time frames, they tell us what we are looking at that particular time. But what if someone at a large institution drops in a huge amount of money in a higher time frame? Because those guys look at the market with the longer term eye. So when you are busy trading the smaller time frames, you will not get as much information as the guys that are looking at the higher time frame. So this is why we are calling this institutional order block, because we are looking at what the smart money is doing. What is the big guys doing with their money? What is their money doing? So we are trying to follow the footprint of the big money on this on this terminology of the market structure. So this forms part of the market structure, the institutional order block. So okay, the platform had frozen for some time. Let's see if we can find others. Okay, there's one that you are seeing here, There's one that we are seeing right here. So this was the last bullish candle, ne? And we paused this level, and then when the market came back to this level, it touched it, and then it moved extremely aggressively higher. So there's the one that is currently happening now. You see, this was a bearish candle that is right here, which formed a bullish order block. The market came back, it got rejected, then started moving high. So guys, this concept is very simple, but yet extremely powerful. So it's one of those things that you should give yourself time, né? When you're giving yourself time, you flip a lot of charts, you look at it, you flip a lot of charts, you look at it again and again till you are confident to apply it on an actual live account. But I can tell you guys that these things are really powerful, and when you look at it in a manner that you're going to follow these videos step by step and try to apply this knowledge step by step as well. So let us define this thing again. That's an institutional order block or an order flow. It is the last bullish or bearish candle on a support or resistance level. So a bullish order block creates a bearish signal. Then a bearish order block creates what? A bullish signal. So guys, we'll definitely check you out on the next video. So I hope you guys will enjoy this one, and then watch out for the next video. Yes, yeah. So thank you. I'll check you on the next video. Yes, thank you and goodbye.